Hi, everyone. This is Rob Roy, and welcome to the Elliott Options U.S. Market Update. As you can see from the background, not up in the cabin in the mountains or not in the Dragon capsule in Florida, traveling again. That's one of the things that trading affords you is the opportunity to go see the world, and I'm doing my best to do that. As long as you have an internet connection, you can follow the markets, and I do that each and every day. What you see on your screen now, as we do each and every week, is the stocks that will be featured in this recording. And as a quick reminder, if there's a particular stock you're interested in, you can go directly to it using the chapters feature in the recording. All right, so let's go ahead and take a look at a chart of the markets. We gapped up today, and that's kind of interesting. We look at the general chart, and you can see that the wave 4 has pulled down. We're still green here, which means that we're still technically in a wave 4. Got a couple things to show you in a minute, but let's get to the economic news of the week. First of all, we had a big Fed meeting this week, and I'd commented that it was going to be more about the comments after what the Fed said that was going to drive the markets, and there was a little piece in what Chairman Powell said. Now, the headline was that all of a sudden the progress on inflation has stopped. I showed you before the line that is flatlined on inflation. But then when we got to the Q&A, something was asked, and he said, we don't want to crash the economy or unduly crash the economy. That felt political to me. We're in an election year, and I don't think the Fed wants to be viewed as playing politics one way or the other. And he said, because of that, they're going to reduce the amount that they're reducing their balance sheet, which is a form of tightening. So you raise rates, reduce the balance sheet. Both of those are tightening. So if they're going to slow down the pace of reducing their balance sheet, that's a quantitative easing type policy. And so it's a way of easing without cutting rates. So I felt like that's how Powell kind of threaded the needle in the market, and the market took off when he said that. We have always wild intraday moves on Fed days. But when he made that comment, I was like, this really feels political. So without coming out and saying we're going to cut rates, he did say he doesn't see anything about raising rates. So it was not a hawkish Powell. It was kind of a dovish Powell, and that moved the market to the upside. Well, then today we had the jobs report that came out, and it was much lower than expected. So if we're taking away the wage pressure in the jobs market, and we have the Fed kind of in I call it the quasi easing pattern, that generated a gap to the upside. When we look at the chart of the S&P, we had consolidated here for a while, and we had formed a bit of a symmetrical triangle. All the markets look like this, so I'm not going to draw these lines on every single chart of the markets. We'll just stay here with the S&P and use that one as our guide as far as these triangles, but they all look the same. And when I was talking before about how the markets were discombobulated, where they had different patterns, and usually over time that comes back to where the markets are correlated. Maybe we had different paths of getting there, somewhere in a wave 5. The S&P is still in a wave 3, but they all have these triangle patterns. And we broke out today, but you know the rules if you've watched. One day doesn't mean anything. It was an interesting day, but do we get follow through on Monday? You have to have a follow through, a confirmation day, and that's what we're going to look to see if that plays out. When we look at the moving averages, look at the 10, 30, and 50-day moving averages. They're all at the exact same spot. So that goes along with this consolidation that we've had over the past, 5 or 6 weeks in the market. Now we want to know if we can follow through to the upside. Last week, I detailed that we had 2 qualified zigzag patterns, one to the upside, starting off of the January low. And so we came down here, and that was qualified for a potential move to the upside. And then we also had a qualified zigzag to the downside. And the question was, which of these is going to be the winner? There's a difference between having qualified patterns and confirmed patterns. We do a lot of education at our website on ewotrader.com, a lot of LA Wave education. And we talk about those terms. There's a difference. Qualified pattern is something of interest, something you want to watch, but you're looking for where's the confirmation, which pattern is confirmed. So we talked about that last week. Now, based on today's trade, you would think, ooh, we're likely that we're going to have a confirmation to the upside, but we have to wait and see. We don't know that yet. We'll know on Monday. If we get follow through on Monday, then it looks like maybe the larger pattern is going to be the one that becomes qualified, and perhaps the market continues to seize on Powell's more dovish commentary, and that can give us the potential to move up towards 550 in the markets. But the market loves to give you head fakes. They do it all the time. So one day is meaningless. So I just want to highlight that whatever happens on Monday is key. Do we come back down to the point of this little triangle and today was meaningless, or do we follow through and we start looking long? I know a lot of people are thinking that the market is weakening and that we're heading lower. And that's another reason why maybe the opposite happens and we go higher. But I just think it's important to highlight what Powell said in that Q&A portion after the comment. All right, looking at some of our other markets, looking at the DIA, there's that same triangle. Again, I'm not going to take the time in the recording out of respect for everybody that's watching. You can see the 10, 30, and 50-day moving averages converging here, and you can see the triangular formation. Wave 4 here. Here's the difference. The wave 3 on the DIA, you're not going to see that in the next two markets, but we also had the gap up on the DIA. So same thing, we'll be looking to see if we get follow through on Monday. Pretty interesting that wave 4 is right at the 38.2% level. All right, let's look at the Qs. Those are the markets where you would expect to see some fireworks if we do, in fact, continue with this viewpoint that the Fed is more in an easing motive than a tightening. And this one was in a wave 5. So you can see the difference there. Wave 5 pattern, but we still had that same triangle. There's the two points of support and resistance. Which way were we going to go? We talked about that last week. There's the breakout today. Just reiterating, one day doesn't mean anything, but follow through on Monday would be quite meaningful. All right, let's look at the IWM. Also in a wave 5, very similar to the chart of the Qs. So we have two charts, the SPY and the DIA, that were wave 3s and wave 4s that went through consolidation. And now we have the charts of the Qs and the IWM that had wave 5s that went through this triangle. But all of them have the same setup with the 10, 30, and 50-day moving averages converging. They all have this consolidating symmetrical triangle, and they all had a gap up today. So the markets are all aligned. So the discombobulation is over. We're back in alignment. This is what's supposed to happen. This is what normally happens within the markets. We're getting a little bit of breathing room from interest rates in the dollar. So we look at the dollar, and it has gone sideways for a bit here. We got a little strong there on the move up in the dollar that was supported by higher rates, and then that's leveled off a bit. So that's helpful. We've talked about this a lot. Why does the dollar matter as far as the equity markets? It's because we have a global economy now. And when countries or companies have business in other countries, the exchange rate matters to the bottom line, to the earnings reports. And so if the dollar will calm down a bit, that's helpful as far as earnings, even though you have seen a weakening in the economy. But notice that we did go up to this level that I didn't want to see us go this high, but at least we didn't go higher. So we went right up to that same area that we were in at the end of last year, October, November, and that's where we stopped, at least for now, on the dollar. So that, again, is helpful. Looking at interest rates, there you can see the little bit of a break. And I show you these zigzag patterns. It's my favorite directional pattern. And look how we have just pegged on rates right at the 100% extension. We've just been dead there for 2 weeks. And then the question becomes, do rates move up to the 161.8% level? That would not be in line with a future move higher in the equities markets, especially in the tech sector. But what happens oftentimes when you go to the expected level, we had roughly a 61.8% B wave correction. That's going to give you a 100% extension. Oftentimes, you will test the previous fib level before moving higher. So if rates can continue to come down and we get down towards that 61.8% level, that could give a little ammunition to the equities markets to continue to move higher. So we're starting to see these aren't green shoots. This is a pivot, in my opinion, of the Fed. I think the Fed pivoted, and I think they did it because we're in an election year and they don't want to be accused of playing politics. I said that earlier. I'm repeating myself, I know, but I just feel like it's important to go through and reiterate. All right, now let's look at some stocks of interest. Tesla, boy, in TradeFinder, people have been angry about Tesla. And by the way, if you haven't signed up for TradeFinder, you can do it with the link that you see on your screen now. Go to that link, sign up for it. We do it live during the market now, every Tuesday at 1 p.m. Eastern time. We talk the markets, we look for trade ideas, and we have a live Q&A every Tuesday during the market. So join us next week if you haven't done that already. And as I started this, people have been angry about why did Tesla go higher on their earnings report, which was expected to be bad. It was bad, and yet the stock went to the upside. We had gotten a little oversold. We held down here at this support level. The wave 5 was labeled. It wasn't a 100% extension. When you don't have a wave 5 that extends more than 100%, you look for a retracement back to the previous 4. That's exactly what Tesla did. This is just basic, pure Elliott wave right here. So the wave 5 doesn't extend more than 100%, you're going to retrace back to the previous 4. And as soon as we hit that level, we've backed off again. And now you can see that we do have area here between, call it 160 and 175. There's a column there of congestion. Now we're sitting on top of it. So that was a trading range for a couple of months on Tesla. We broke above it, but now we're right back to it. And can we hold that level and break higher, or do we break back below it? I still think Tesla is a wait and see. I don't think this is a stock that you're ready to go directionally yet. Let it break above 200. If it can somehow do that, I don't see the catalyst, but if it can somehow do that, you got to go long Tesla. But if it breaks down below this 160 level, we're highly likely to come down and test those wave 5 lows, and I think it becomes a short. So that's some commentary on Tesla, and I just thought it was really interesting how the earnings report comes out. It was as expected, bad, yet the stock went up. And it's oftentimes when everyone expects the market to do one thing, it does the exact opposite. But if you were adept at Elliott wave, you would have looked at it and said, it did exactly what it was supposed to do. So that's the key there. Let's look at USO. A lot of people will ask about that. And by the way, just as a quick reminder, we are giving away one of our level 3 subscriptions every month of this year. And that's worth thousands of dollars. It has our AI-based impulse strategy. It has our volatility strategy, which is looking for triangles with breakouts. What I was just talking about, how all the markets were in triangles. And then it has our AI-based time strategy, which is sideways. So we cover every market condition. We cover consolidation, we cover sideways, and we cover directional. All you have to do to register for the drawing is post a comment under this video. That's it, and you're automatically in the drawing. And we're giving one away every month. So make sure you leave a comment. You can talk about the markets, you can talk about Chuck Norris, whatever you want to do. It doesn't matter. And I read every single comment. I respond to as many as I can, time and travel allowed. But I do enjoy reading the comments, and I'm not afraid if you have an opposing view. That's what makes markets. If everybody thought the market was going to move the same way, there'd be no markets. We have to have a buyer and a seller. We have to have someone bullish and someone bearish, and that generates markets. So it's great to have opposing views. And on this platform that you're seeing me use is software from the Hub organization, hubb.com. There's a great social media aspect to it. You know, people talk about Reddit all the time. They just went public, etc. But here on this platform, in the social aspect, the themes, you can actually post your own idea, and everyone that has this software can look at your idea and rate it. Do they agree? Do they disagree? It's really cool. It's a great feature. So not only do you get these charts and live Elliott Wave, you can get intraday charts of Elliott Wave, but you have the social media aspect as well. So if you don't have this, it's in beta form now. Go to hub.com, download it, and you'll see the themes area. We talk about it on TradeFinder every week and show you how to do that. So here's oil. And I can tell you with my travels, there's still plenty of people on the road. But if I'm being honest, this last trip, were there as many? Probably not. You can see we have a little zigzag pattern there. I'll go ahead and highlight that. But we're at a wave 4 nearing 50%. And we'll see if this is where oil holds or if we go down to the 61.8% level. But that would be kind of key as to the consumer where we go. Look at that, right at the 61.8% V wave correction there. And look where we went, exactly to 100% extension. Once again, Elliott Wave nailing this pattern. And then you have the corrective zigzag pattern here. It's directional. It can be directionally to the upside or the downside, even though it's technically called a corrective pattern. You can't get more classic than that. So everything I've shown you so far has just been spot on Elliott Wave stuff. So there's a beautiful zigzag example. Now that means we've hit the level that we were expected to on USO. What happens now? That'll be the key. So do we continue down to the 161.8% extension? Do we start to move back up in a wave 5? Once again, not conducive to the equities markets if oil goes higher, other than the energy stocks. So that's why I keep talking about how what happens from Monday is going to be very important as far as do we get a continuation, a follow-through day, or if we just kind of say, okay, that was a head fake that occurred on Friday, and we're kind of moving back to the downside. It'll be really key. All right, so continuing on in our stocks of interest, there was a comment or an ask about IBRX in last week's recording. As I said, I do read them. We get to as many of them as we can, time allotted. This is an immunity bio, so biotech, and we have this vertical move, which I hate. I hate vertical moves. It has consolidated nicely. We did get a move back down, and that's why I don't like vertical moves. What goes vertically up oftentimes comes vertically back down. You know the other rule, no security in any time frame gets very far away from the 10-day moving average. So we had a gap up. We had a vertical move. We came right back down. We filled the gap. We came back to the 10-day moving average. So we satisfied both of those, and it's consolidated nicely. I'm not personally familiar with this company, but from a technical standpoint, it consolidated for a very long period of time, and then it broke out. So can it continue to do that? If you want a stock that has a breakout like this to continue, that's the kind of consolidation that you want. So perhaps it does. For me personally, I would want to see that wave 3 high taken out, and then I could look to go long. But you have to keep in mind that we had this consolidation for so long, there's a chance that we come back down and test that. But for now, it does look like there's a potential for this stock to go higher. You ask about PayPal. PayPal is one that we've looked at periodically here. Thought it was a great time to bring it up again. You can see that our wave 4 here is getting near the 38.2% fib level. But when you look at PayPal, just from a general technical standpoint, you see the fact that we have higher lows. That's always a good thing. Nice little trending pattern there. The resistance here at 67.5. So if I was looking at PayPal, I would want to see, and we tried, we've been turned back a couple of times. We tried back here at the very end of April, and now at the beginning of May, we kind of took a peek at it today, and that level of 67.5 is proving as resistance, but notice that we have an ascending triangle. I've talked about this time after time after time. An ascending triangle does not mean we're going to break to the upside. It just means we're going to have a breakout. Ascending, symmetrical, or descending triangles, there's no directional bias. No matter what you read on the internet, they're going to break one way or the other. If it breaks to the upside and you get a close above 67.5 with follow through, I think PayPal can move. But you can see the head fake that occurred there right at the end of April. That's why we need the confirmation and follow through day. You look at that and you say, oh, PayPal's off to the races. not so fast. It moved right back down because we didn't get the follow through day. So the rules that I kind of share with you are over a lot of years of experience, things I've learned, and that's what I try to do is just give you as many of those things as I've learned over time to try to help you improve your own trading. That's really what we're all about here. So this ascending triangle, something big's going to happen with PayPal, but the direction remains to be seen. Looking at AMD, ask about AMD, another one that we show periodically, and pretty good time to bring that up. Notice the wave 4 here is down at 77%. That's past the 61.8% level that I like a wave 4 to hold, but Elliott agreed that 78.6 is a fib level, so the wave 4 stays in place as long as we stay above 78.6. But boy, are we awfully close on AMD. We're right there. So AMD needs to hold here, but we're below the 10-day moving average. For me to go long AMD, and I know people are probably itching to turn and go long it, it's got to get back above not just the 10-day moving average, but the 50-day moving average as well, the royal blue colored line there. So I really would want to see AMD get back above this 175 level before I would consider going long there. If we go too much further, then this pattern, even though it looks like we're in a wave 5 to the upside, this will become disqualified. We're so close to that 78.6% level. So I think you have to watch, wait and see on AMD, see how that plays out. Meta, that the whole world has been talking about for the past couple of years. I made the comment last week that in the earnings call, Mark Zuckerberg couldn't help himself. He had to go back talking about the metaverse again and how much it was going to cost and all that. And even with a decent earnings report, the stock tanked. It did hold right at 400, big round number. It's only a 28% retracement. That's how much Meta has moved. So we're not even at the 38.2% fib level yet. And we had a little bit of an oversold bounce here. That's all this was. So we had an oversold situation here, too far away from the 10-day moving average. We bounced back up a little bit, but on today's high, we touched the 10-day moving average. So once again, Monday is going to be key on Meta. We have this island reversal pattern here where we had a gap up, then a gap down, and that leaves these bars here just floating on an island. That's what an island reversal is, and that's typically significant in the fact that whatever happens on the second gap goes for a while, which means we may just go through an extended period of consolidation here at a lower level, more around the 400 level, where we were consolidating up around the 500 level. So Meta is a difficult one for me from a directional standpoint until one of those gaps get filled. We're trying to move up and fill this first one, but all we did, again, is touch the 10-day moving average. That's not enough yet. Let's wait and see how that goes further. Coinbase gives us a look at what's going on in the Bitcoin world, the crypto world, if you will. I commented last week how we had this symmetrical triangle. We broke down and formed another triangle, and we're just kind of pegging right there. Pardon me, even though Coinbase came out and had pretty decent earnings. So we'll see if we can continue to break higher. But to go long Coinbase, you got to see a move above 250. If it were, and I'm not saying it's going to, but if it were to break 200, it's a short. Because if it breaks 200, we're coming down here to 150. But it's got to do it first, once again, with follow through. Notice where the upward target and the downward target are kind of spaced out from where that triangle was, the bottom of the triangle at 200. So 250 or 150, one of those levels is going to get hit on Coinbase. I can tell you which one. The 10, 30, and 50-day moving averages all converging here. We're post-halving in Bitcoin. Consolidation is normal from the Bitcoin people that I talk to, and then you get the run. And if that happens, Coinbase will go with it. But if you want to go long Coinbase or anything crypto, you need to see a further move to the upside before we start looking to go long in those areas. We were looking at the metals before. We looked at GLD. People ask about SLV, which I think is a good place to look metals-wise as well. Didn't have quite the vertical move. It's still pretty vertical, but not quite as much as GLD had. And look where we are. The wave 4 touched the 50-day moving average here. We held it today. We're right at a 50% correction. And if I go back in time and I can condense the chart back down here, and you'll be able to see how far back that level of 23 goes. It's been resistance for a very long time. It's now support. And so if we go from here back to the upside, that looks at the inflationary picture again. If we broke below this level, which I think would be a difficult thing, if you're really aggressively minded, it seems like a pretty interesting time to go long SLV because your stop is right there. If it breaks below this level of 23 right in through here, then you're out. But if it holds it and breaks higher, you have a pretty good room to run to the upside on SLV. So I think that chart is very interesting. If you're more conservative minded, I usually try to give both a conservative and an aggressive view, then let it get back above the 10-day moving average. And then you can go long SLV. So you got a quick stop if you're aggressive. If you're conservative, just let it break above that level there where the 10-day moving average is, and then you can go long. So I think those things are very interesting to look at. So all eyes on whether or not we get follow through on Monday. Hope you have a great weekend. Look forward to talking again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.